I'm here today with Tracsis CEO Chris Barnes and CFO Andy Kelly, who are reporting interim results. Chris, can you provide an overview of the period?
Yes, we were really pleased with the first half performance, which was in line with our expectations. We've got robust results across our rail technology division in particular, which has got a very strong pipeline of activity, both in the UK and in international markets. And we also have very high activity levels delivering key software contracts across the rail industry at the moment. On our data analytics, consultancy and events division, our data and analytics and GIS business has continued to perform strongly and is winning lots of new work. And importantly, our traffic data and events business units, although continuing to be impacted by COVID-19, are now starting to see activity levels return as we see consumer confidence increase and restrictions being lifted. So as we move into Q3, trading continues to be in line with expectations. We have high activity levels across large parts of the group. And importantly, our financial position remains healthy and we have a strong cash position. And really importantly, the whole team has done an outstanding job over the past 12 months. We've managed to protect jobs, we've looked after employee well-being, and we've identified and won significant new business, which is really pleasing.
Andy, can you give us an overview of the financial performance in the period?
Of course. So total revenue was £22.2 million, which was just over £4 million or 16% lower than H1 in the prior year. And this really reflects the impact that COVID has had on activity levels in certain parts of our group. As Chris has described, this was mainly in the events and traffic data businesses, with a smaller impact on delay repay revenues on the rail side of the group. The total impact of COVID in these businesses, if you compare it with the revenues that we delivered in the first half of last year, was just over £6 million. However, across the rest of the group, we saw continued good growth of 5%. And this is before the revenue contribution from iBlocks, which is the smart ticketing business that we acquired in March of last year. We've continued to see good growth on the rail side of the business, where there's been very little impact from the pandemic, and revenue in this division was up 11% to £12.1 million, including the contribution from iBlocks. And despite the lower overall group revenue, we delivered EBITDA of £5.4 million, which is at very similar levels to the first half of last year. And this includes the benefit of cost reduction actions that are tracking in line with our expectations and which delivered a year-on-year benefit of £1.3 million in the period. And in addition to that, we have continued to use the government furlough scheme, which delivered a further £0.5 million support to the income statement. And finally, our balance sheet position remains very strong. We continue to see good levels of cash generation. We had cash balances of £20.8 million at the end of the period, which was an increase of £2.9 million versus the year end. We don't have any debt and we haven't deferred any VAT, PAYE or corporation tax under the government COVID support schemes.
Chris, can you provide some more detail about what's happening in your markets and how Tracsis is positioned going forwards?
Yes, absolutely. In our rail technology and services division, we continue to see really strong growth and lots of opportunities. What's been pleasing from a Tracsis perspective is that our rail business model has not been directly impacted by low passenger numbers, which have been caused by the COVID pandemic. And the reason for that is that the software and the products that we offer are an essential part of running the railway. And what that means is that irrespective of how many passengers there are on a train or how many passengers are using the network, our software plays a key role in the day-to-day delivery of the railway. As a result, we have secured all license renewals so far during the pandemic period, and all of our large projects continue as planned and continue to be delivered to the milestones as planned pre the pandemic. We have a large pipeline of new multi-year software opportunities, specifically with train operators and with Network Rail, and we're also starting to see new opportunities emerge internationally. And in particular, we've got 2 large contracts which are in the final stages of award. So overall, that gives us real confidence that we've got a strong product offering and that we continue to see real opportunities for growth ahead of us. There is, however, significant scrutiny from both the Treasury and the DfT on all rail spending, and this is and will impact procurement timelines. And it's also impacting the attention on project delivery, which actually should work to our advantage because this should very much help accelerate the industry's adoption of some of our key products. Looking forward in terms of the outlook, The Williams review is expected to be published after the May local elections, so that will give some real clarity to the industry in terms of where the overall industry is headed. And within that, we expect the government to continue to invest in the digital railway and into improving the overall customer experience. And what that means is that hopefully will be very well aligned with the key growth vectors of the Tracsis business and the core products that we supply into the rail industry. When you look at our data analytics, consultancy and events division, we're expecting this division to bounce back from COVID in the coming months. We've seen better than expected activity levels across our traffic data and events business units, but they are still well below historic levels. But we are starting to see more customer inquiries, and we're starting to get more confidence that those businesses are starting to return to normal. And then the real area of opportunity is in our data analytics and GIS business unit, which continues to perform strongly and has a really strong order book. And we think there are a range of opportunities here to accelerate its growth. So in terms of an outlook, it's all really about bounce back through Q3 and Q4. It's about further growth of our data analytics and GIS business. And then importantly, we launched a new brand and a new transport consultancy on the 1st of March, which corresponded with the acquisition of Flash Forward Consulting. And that opens up a whole range of new market opportunities for us.
Andy, how has trading been post-period, and what's the rationale for the new group-wide branding?
So overall, there's been encouraging momentum for the business as we head through Q3. Trading so far is tracking in line with our expectations. And more significantly, we are seeing high activity levels across large parts of the group. On the rail side of the business, we're continuing to implement a number of large multi-year software contracts that were run in previous years. And we've got two further opportunities that are in the final stages of contract award. Both of those, again, are significant multi-year contracts. And on top of that, we've got a strong pipeline of further opportunities across all of our rail businesses, both in the UK and in international markets, all of which gives us confidence in delivering further sustainable revenue growth as we look further ahead. On the data analytics, consultancy and events side of the group, as Chris mentioned, the data analytics and GIS business has shown good growth in the first half of this year. Activity levels here remain high, and there's a strong pipeline of opportunities for further growth. And whilst the events and traffic data businesses have had the worst of the COVID headwinds, in both cases, we believe the underlying demand remains strong. We are anticipating a bounce back, with activity levels progressively returning to more normal levels as COVID restrictions are lifted. Now, the exact timing of that remains uncertain, but we are monitoring the situation carefully to make sure we keep the cost base under control, but also that we're ready to respond quickly when activity levels pick up again. In terms of the branding, we launched a new group-wide branding in March, which now applies to all business units and which will ensure that all parts of the group share a consistent brand identity. And this is a really important step for us, both in terms of continuing to integrate the group and also as a way of enhancing collaboration across our businesses. And that applies to cross-selling, but also, and again, really importantly, in terms of developing the next generation of our products. And equally, it helps us to increase our customers' awareness of the breadth of products and services that the Tracsis Group offers and how we can help our customers to address the business critical issues that they face. Alongside the brand rollout, we expanded our consultancy offering with the acquisition of Flash Forward Consulting. And Flash Forward has been combined with our existing rail consultancy and passenger analytics businesses to create a combined consultancy business that can access all areas of the Tracsis Group, will provide a significantly expanded consultancy offering, and this part of the business will really champion the new branding going forward.
Chris, what are the key areas of organic and acquisitive growth for the group?
Well, our growth strategy moving forward is focused on 5 core areas. 4 of those are very much around product and software, and one of them is more around capability improvement and capability enhancement. So just to focus on the product and software-based opportunities first. So we see 4 key growth areas. So the first one is around operational performance software, and this is around products like Trax Enterprise that are very much around driving operational performance improvements and cost reductions for the train operators, which is a real area of focus at the moment. The second growth area is around remote condition monitoring, and that's both around hardware and software. And that has 2 elements behind it. One is to move away from frequency-based to asset-based maintenance. So in other words, having fewer people on the railway doing maintenance on a less frequent basis, which is important both in terms of saving lives and also in terms of cost efficiencies. And it's also around real-time asset tracking, so you can understand the performance of the rail network at any point in time. So that area has performed strongly for us for the last few years and continues to be a big growth opportunity for us. The third area is in risk management and safety software. One of the industry's key objectives is zero fatalities, and our digital product suite called Rail Hub has a really important part to play in helping to improve safety across the rail network. And then our fourth product-based growth area is in smart ticketing and customer experience. And as everybody would know, post the COVID pandemic, the way people travel, the way we want to buy tickets, the frequency with which we travel is going to change. And we have a really innovative product in this space, which we expect to be highly relevant to consumers as people return to work. The fifth area is a capability-based growth area, which is in data analytics and GIS. And this is increasingly important because what it allows organizations to do is to take masses and masses of data and turn that data into really powerful information or decision-making dashboards. So to give you an interesting example, this is heavily used in regulated industries where you need to both understand where your assets are, you need to understand how your assets perform, and more importantly, you need to be able to demonstrate how the performance of those assets aligns with legislation or legal requirements about how you can adopt and use those particular assets.
And how would you describe the outlook for the group?
Okay, well, we continue to have strong confidence in the performance of the business moving forward. Q3 trading is currently in line with expectations. And as spoken about previously, we're now starting to see a bounce back in those business units that were previously impacted by COVID-19. We've continued to have 2 large multi-year rail contracts in the latter stages of contract award, and we expect to be able to announce those very shortly, which will give us even further confidence in the relevance and importance of our software portfolio. And also importantly, we believe we're very well positioned with regards to the industry drivers at the moment, and that these will deliver sustainable growth to Tracsis as a group moving forward. So really, our focus is in 4 areas. It's around continuing to drive innovation and making sure that we're very much seen as thought leaders within the industries in which we operate. And alongside that, it's about delivering the large ongoing projects. It's about capitalizing on the pipeline of large multi-year contracts and making sure that we can secure as many of those as we can in the coming months. It's about continuing to explore mergers and acquisitions, which remains a key part of the group strategy. And in particular, that will be focused around rail software and data analytics growth. And finally, as a group, we are committed to our overall strategic growth plan. We continue to invest in line with the plan that was set before the pandemic. And we have a real confidence in our people, in our products, and in our position in the industry. And we're very confident of what lies ahead of us.